Back to the Mike Rosehart Show. We're live again for another Wednesday installment. And today we're going to talk about what is going on in this world. The Fed had a treasuries auction today, and it did not go well. They look at the 10-year yield right now. It is spiking above 4.5%, which is cautionary. What's interesting, is that these tech assets are pricing all-time highs. NVIDIA over $1,150 a share. The NASDAQ QQQ ETF that I follow, again, 460. NASDAQ broke records yesterday. It was the highest close in history ever, which is kind of rational when you think through the current inflation reads. So when you look back at, we had prints in the 3% range and mid threes, low threes towards the end of 2023. And now in 2024, we had January, February, March. We've got almost a third of the year is done with, and we've had readings, except for the last one, which is 0.3 at 3.6. The rest of them have been a 4.8 read, meaning 0.4 month over month, which is 4.8% annualized. The trending inflation has gone from a 3 handle to a 4 handle, which is a 25% increase, and is still 50% above their 2% target, which originally they were targeting for 2024. So it's interesting to see that the Fed has zero credibility, zero reliability. Everything they say, they're pretty much full of shit when it comes to their forecasts. I think the economists out there don't really have any idea either, but the economists are more accurate than the Fed is in their predictions. And so I'm curious to see how the Fed is going to react to this, because in a lot of ways, we've got this really high inflation. Now the bond market is saying, hey, the 10-year treasury yield has been inverted for the longest period in history. It was, in the late 70s and early 80s, it ran for a while. And it was a signal, the inverted yield curve between the 2-year and the 10-year yield. It should be that the longer you lock your money up, the better the return is for trapping your capital for a longer period of time. But it's actually the opposite right now. And that's supposed to be indicative of things coming to, rates coming down, and typically, it's typically a painful process, typically leads to recession. They usually can't cut until there's pain. Now, the last thing I think to really look at is when you think through how this is going to play out, how does this affect things? How do you react, with it? One thing I didn't kind of account for in my analysis is, I'm looking at Canadian data, and I'm looking at the Canadian economy, and I'm looking at, even in the US economy, I'm looking at sectors like real estate that are being destroyed right now. And a large part they're having major, major problems. What I didn't account for is that people in times of, high inflation, and interesting reports are showing that the inflation is actually unanchored right now. People are losing confidence in the Fed's ability to lower both interest rates and inflation, but mainly inflation. And so as inflation expectations are unanchored, people actually YOLO their money and gamble. If you look at most great societies, gambling rates actually skyrocket in times of before the Roman Empire fell, and in most societies when they're going through hyperinflation, people just gamble what they have, because the logic is, why would you hold on and save anything when it's going to be worthless anyway, and you're so hopelessly fucked that you just throw it all in. And people are doing that with meme stocks. There's a huge amount of capital that's flowing to, what's the latest and hottest thing they can just grow their money with quickly. NVIDIA isn't really a meme stock, but it is experiencing a hype, I think, that's positioning it. And it's been an amazing growth story. I love NVIDIA's growth story. It went from being worth $100 a share, probably to $600 a share, which is an impressive trajectory. And I think they will see their growth curve correct back down, their PE ratio with it. It's a lot like Tesla, and Tesla was over $400 a share. Now it's $170 a share. Tesla fell 55% off its all-time highs. And I remember all the Tesla fanboys were like, it's going to the moon, $10,000 a share, whatever, blah, blah, blah. No rational reason why. NVIDIA feels a little bit like that. Now, NVIDIA has really good fundamentals and great profitability. They have a moat that is shrinking, I think, as competitors get in there and take it over. But it's a good example of the NASDAQ right now, because I think, oddly, NVIDIA is almost 10% of the entire NASDAQ composition. So it literally is carrying the NASDAQ with it. So the market can't really go down with NVIDIA skyrocketing. But tech in general was something I didn't factor in. Was one, I didn't think of the AI bubble being as significant and hyped as it is. Two, I wish I'd shorted anything other than someone just put a comment in there, why didn't you just short the Canadian stock market because it's been doing trash? It's true. Canada's under terrible management. Knowing what I know, it makes sense to short most Canadian companies, including Canadian banks. Now, the danger, I think, in in shorting in general, you shouldn't short. So I'm just gonna, if you're watching this, and you're looking for advice here, don't short. Don't do that. Buy quality assets. Look for stuff that's gonna do well as, if inflation stays high for longer, as rates begin to fall, because they will fall. It will be painful, but rates will fall. I think what we need to see is the Fed. Honestly, they're gonna almost in a rock and hard place. Like if they go and they hike again, it's what inflation needs. We need, like, the market is signaling risk assets are ballooning, which means there's no shortage of capital. But at the same time, there's tons of printed money in the system. People have capital. They're not afraid to deploy it on risk assets, which again, like, seems counterintuitive, right? If you're worried about, rates falling, why would you? There's so many other better plays, I think, like real estate as an example. But it really kind of signals that, to me, that the smart money doesn't actually believe inflation is going to fall the 2% target. They're going to use inflation to grow their net worth, right? And so by investing in those risk assets that would balloon in times of high inflation, I think there's a play there. So people are thinking, hey, like, if inflation runs high, we win. If rates come down, we win. So people are thinking, hey, bull case, there is no bear case. And as soon as everyone's optimistic, that's when it can happen. When everyone's expecting a recession, everyone's hedging, you can't get a recession because everyone's expecting it. It needs to be like the consensus is pure greed, everything's all good. That's when you get your correction, right? So you can't really have a correction when everyone says we're going to be having a correction. And finally, this last week, I was looking at a few bearish analysts that I follow and a few bearish folks that I, kind of just have my eye on. And they've finally started to say, hey, I give up on shorting. I give up. I'm like, okay, finally. They've dragged the shorts for 2 years of straight upward. I think it's finally time that we could see a bit of a pullback, and it'd be healthy and natural. I could see a 5% pullback from yesterday's we had a 460 QQQ score. I could see a 10% drop on that really easily, which would take us back to like a month ago. That's how crazy the market's ridden up. But anyway, crazy times we live in. It was interesting to see that people are losing confidence in the Fed's ability to tackle inflation. I'm curious to see how Jerome handles that because, for a while, the last couple of reports, he said we don't have enough data dependent. We can't drop rates, but we want to, but we can't drop rates yet. And it's been like, oh, data dependent. And then the data was bad in January. Then it was bad again in February. And he's like, oh, that's a one-off report. And there was two. He's like, oh, that's not a big deal. And they keep saying like, we don't see this. And it's like, why am I seeing something different here? And why haven't you acknowledged it? And it's because acknowledging it, kind of would send the market into a free fall. And I think it's an election year, and that's one of the biggest challenges that they're going to have is that to beat inflation, to put the final nail in the coffin and get inflation back down to their 2% target, I really do think they need to be at a point where I think the NASDAQ has to pull back. There has to be pain in the economy for rates to fall. And the economy is just too strong in the US. Now in Canada, we're going to get a rate cut I'm forecasting Labor Day. We will have a rate cut here. It won't be good for our currency, but our country cannot sustain. The US has, again, 30-year fixed rate mortgages. We don't in Canada. And the majority of people are renewing or have renewed and are in dire financial straits where they just can't. They just can't keep going like this. And so rates have to fall in Canada or we're going to hit a recession. We already are in a recession in terms of GDP per capita. Now, Trudeau is smart, our prime minister. He allowed in like 2.5 million immigrants in the last couple of years. And so, when you increase your population by 5% and you have all that fresh capital come into the country, all that fresh labor come into the country, your GDP actually will do really well. It's bullish for GDP. But our GDP per capita is a more alarming number, which is at our lowest level in the last 20 years. So we are really not doing well in Canada. We're pure recessionary territory. Our economy is strongly reliant on low rates. And like the Canadian economy is heavy into like, you got your telcos, you got your utilities type stuff, you got your financial plays. We have a lot of financial plays at the big banks in Canada. All of these sectors are heavy dividend. They pay really good quality dividend income. And dividend income is not attractive when interest rates are 7%. And so those companies struggle, actually. Like bank stocks are down 10% in Canada. Almost all of our index is down. It's doing shit, right? Comparatively to the US. Because again, we're so interest rate dependent. All of our industries do really well in a low interest rate environment, and they do really shit in a high interest rate environment. So Canada is really not a great place to be unless you believe that they will be able to tackle inflation. I think they will be able to tackle inflation. My bet is still on that they will control inflation, get it back down to 2%, but it will cause a recession in the process. So that's my thought. The other way it could go is they continue to deny that inflation is the problem, mask it, change the way they calculate it, and downplay it, and let it run. Let inflation run wild. In which case, the logical thing to do is to spend everything you have and invest it in risky assets. That actually makes sense because the dollar is depreciating in value. Why would you hold on to it and save it? Just YOLO it. So I guess in some ways it's a logical response, to bid meme stocks up that have no real value, just gambling and hoping on a double and a triple to keep up with inflation. So I don't blame people for making the decisions that they're making right now. I understand why people are doing what they're doing. People are desperate. And in times of real pain, like the bottom half is experiencing, almost a third of the value of their purchasing power gone since 2020. That's fucked. Like rent is insanely high. Food prices are insanely high. And they've grown, like food alone is up 30% since 2020. That's insane. To go up 30% in such a short order of time. There was more inflation in the last 3-4 years than there's been a decade before that. So that's a major amount of shit to swallow for the average person. Now, if you're wealthy, you don't give a shit, like you're fine. You have lots of passive income. Again, I'm largely not affected by inflation. So I don't feel it the same way, but I see my tenants and I see people that work for me and I look in the economy at people who are in the bottom half. The bottom half rent. They can't even afford to own and they go paycheck to paycheck. And when interest rates are this high, that little bit of interest increase, it destroys them financially. This little bit of food increase of 20%, not even a little bit, if their bills go from, even in Canada, gas prices, you go to the pump, fill up, it's $1 a liter to fill up. Now it's like $1.60, $1.70 to fill up. A 60-70% increase in cost of gas. If you're spending $300 a month on gas before, you're spending $500 now. That's not nothing. That's every couple $100 adds up, and it's major for the average consumer in Canada. And so, dire times. I do think we're way, way overbought on, in tech right now. I think tech is overvalued, but I don't know how this is going to play out. It's interesting. Real estate is definitely in the shitter. If you can scrape some money together to buy properties right now, there are some deals to be had. I was just looking at data here in Ontario, and we've had the coolest spring we've had in 2.5 decades in my market, in London, St. Thomas, in southwestern Ontario. We're seeing, for the first time, I've never seen a May where prices fell or were flat. It's always up every spring. That trend has never bugged. And this year we had like the smallest uptick I've ever seen. Market completely flat. Listings up 400%. Available inventory up 400%. There are 4 times as many houses as 1 year ago, and even more than before that. So there's a pile of inventory building and no buyers. So what happens when you have a pile of new listings and no buyers? Prices fall. So I do think into this winter, we will have a great buying opportunity. I did think that we would get the spike this summer. I've been waiting for a rate cut here in Canada. Still haven't had one yet. It's, that will be the catalyst that we need. I do think that it will have, nothing moves in a straight line. So there should be little bounces we can, reallocate. I'm still bullish and buying over a 10-year period. I feel really good about buying real estate. It's a quality asset that produces cash flow. And you want to buy assets you don't have to sell. Like the problem with NVIDIA, like why I wouldn't buy shares in NVIDIA right now is like, I also wouldn't short it. It's too dangerous to short right now. Just because, again, there's so much hype and FOMO, fear of missing out, piling in, right? A bunch of degens piling in, degenerates piling into the stock, which could send it even higher, right? It's unanchored from any intrinsic value. When you trade at 70 times earnings, 70 years of earnings, current earnings, which are already growing massively. And that, as that growth curve kind of slows down and competitors make their own chips, there will be a point where their moat shrinks and their PE ratio falls to 20 again, right? That's where when a company isn't growing as aggressively, 10 to 20 is more normal in a balanced market. So 70 PE is way out there. Like they would have to grow way fast for way too long. I think the growth is overhyped. They will have growth, there's no doubt, but there will be a time where their sales are cannibalized. And so the problem with NVIDIA is that it's overpriced, too much hype. If NVIDIA was $400 a share right now, I would jump in. I like 25 PE. I would be like, okay, it's starting to make sense. But just way overhyped, I think. That's the challenge right now is in real estate. Like the opportunities I have around me, I look at like something like NVIDIA. I look at something like real estate. Where in real estate, I can see in cottage country, properties have dropped 50% in value in Ontario. I didn't think that could ever happen. From the peak, we see a 50% drop in some cases. That's unreal. Like $1 million houses selling for 500 grand here in like the rural areas of Ontario. And that's because there's no liquidity. Like there are just no buyers. And when you have no buyers and a ton of available inventory, Some people will just hold. Like, I'll hold, rates will come down, I'll eventually sell, I'm not in a rush. Those people won't get fleeced. But the people who are flipping or on high interest debt or have to sell for some reason, they just have to lower their price until it's so low that a buyer is like, I'm just gonna wait for rates to fall. I'm not in a rush. Prices aren't going up. That buyer sees this and is like, holy shit, that's such a good deal. It's 50% off. I have to buy it. And that's how they can ignite a sale. And it's that bad right now. We're like, you literally just have to drop to, here's your appraised value. You just gotta keep going lower. Because real estate is not a liquid asset. It's very, very illiquid. It's hard to move an asset like that. You just, it's not a quick sale. And in this market, it's very difficult to go from, I want liquidity. You're looking at like potentially 4 to 6 months from start of like preparing to list it, getting on the market, waiting for offers, getting the offer. Offer has a 60-day closing, finally get the closing date, finally getting the cash. Like it's a long period of time. The average listing right now is like 60 days on market. The average offer is a 60-day closing. So right there, you're looking at 4 months, a month to prep, get photos, get it all ready. You're looking at 5, 6, 7 months. Whereas a stock, I can liquidate tomorrow. So real estate's a lot slower to move through the cycles. Whereas stocks, like mania one day where things go up, down 10, 20%. It can be wild, right? Interestingly, like the biggest companies in the world right now, they've been kind of trading like meme stocks, which is, the volatility is crazy right now. It's just another like aside I'm noticing. I don't know what to do about that. I guess other than playing the volatility, you could play that and make some money without trading the direction either way. If you were to stop out on both directions, you could in theory just play that vol. BMO stock tanked recently. What's your take? Yeah, so BMO, I didn't look into it deeply, but BMO missed on their recent earnings and they dropped 9%. Their shares in the company dropped 9% today. For those who don't follow Bank of Montreal, BMO is the, I think, second or third largest bank in Canada. And they also have merged with BMO Harris, so they have a large presence in the US too. Both TD and BMO are the largest US presence banks, but they just really did not do well. Part of that is that the way that BMO structured their mortgages, even if you're on a variable rate mortgage, I have a mortgage like this, it's pretty cool. Get this. The variable rate mortgages, they have a set payment. Your variable rate mortgage might have been, I have a mortgage that was at 1.3% interest, variable. And it has a fixed payment, call it $5,000, $10,000 a month, whatever it was. That payment has stayed the same, even though the variable rate has went from 1.29 to 6.99. So the rate has quadrupled, meaning the cost, like normally that $5,000 payment, $3,000 was interest and $2,000 is principal. What's happened is, by law, they had to keep the way that their policies are set up and within the banking laws, and there are other banks who didn't do this and raise their price. But the way BMO's mortgages are structured, they didn't raise them. And I'm not an expert on this, but basically what happens is they left the payments the same. And what's happening is the interest is not $3,000 anymore. It's $8,000 a month. And the payment's still $5,000. So these mortgages are all in negative amortization, meaning every month the bank has to lend the mortgage holder $3,000 more. They're not even collecting enough to cover the interest. So that's a problem for the banks in Canada. It's a major problem for their asset mortgage book. I'm sure that behind closed doors right now, executives at the big 5 banks in Canada are putting major pressure on the Bank of Canada to lower rates. The challenge with that is it's going to crush our currency. I will see Canadian dollar to US dollar go in the $40s easily, maybe $44. It is not bullish for Canadian dollars, especially because, and it could be good in theory if we used our cheap dollar to grow our industries, but we just don't because we're environmentally friendly. And it's funny because Trump will probably win the election. I have no idea, but probably. And then he's going to repeal the environmental policies. We're like, it's funny, like the armpit of Canada is Sarnia, Ontario. And like they have a lot of industry. If you go down Chatham, really, all the way down to St. Clair River there, it's all pollution. It's funny, like on the other side in Michigan, it's all the same. And so if they were to shut down, and be more green and shut, jobs down in Canada and close refineries, and then they would just do it in the US right beside it, like by the division. And we're like, we're doing good for the environment. And it's like, actually, we're just fucking our country because they're just going to produce the same amount of emissions by producing double where it is allowed in other countries. And so it's just silly in a lot of ways. I think it's really silly the way that they don't cultivate. I wish they would incentivize clean practices. We want that, but we want them to stimulate and grow, I think, the industry of Canada. And so it's a shame to see that we don't take advantage of what Canada can be. But yeah, to go back to BMO. BMO is not done well. They're not doing well right now. I think it's a signal of all the banks, again, not doing as well right now, but they specifically have been growing their mortgage book. The interesting thing is that eventually they will, as rates fall, they will catch that back up. And so I'm fairly confident that the banks, in a lot of ways will bounce back in a strong way as rates fall. So I am actually bullish. You know what? I bought a little bit of Bank of Montreal today. I'll disclose that. I did. I bought a couple hundred shares in Bank of Montreal today at -9%. I thought, hey, it's going to come back. So I'm bullish on Bank of Montreal. Yeah, I'm not going to go all in and mortgage the farm, to buy it, but I do think that there's a lot of opportunity to ride a good 10-20% appreciation as rates fall. The dividend portfolio is going to do really, really well. In normal interest rate times, so not these, Randy says, would you put more than 20% down so that property can cash flow? I always try to put as little as possible down. That is just a general rule of thumb. The reason is this: if the property can't cash flow with 80 or 90% debt serviced, you don't want the property, period. So that means that like half of real estate is not attractive, period. Let's just start there. All landlords are not created equal. There are landlords who lose money every month and don't run it as a business and own properties for emotional reasons. And that's not us. We run it as a business. We're here to make cash flow. It's just, so I never look at putting more down to make a deal work. It's just not the play for me. I can go into a property with an exit in mind, like, hey, I'm going to flip this property. And I can go in and say, hey, it's not going to cash flow, but I have an exit strategy where I can make a huge lift by transforming the asset in whatever way. Maybe I'm renovating it. Maybe I'm changing the use of it. Maybe I'm changing the rent roll, reducing expenses, whatever. In that way, I can make a plan and say, hey, I'm going in, going out. But if I'm buying a property, and I try to buy properties that can cash flow positive, it needs to be able to cash flow with, 10% down, 5% down. I run my properties, when I run my analysis, at 0 down. I'm like, if I put none of my money in this property, could it 100% finance to cash flow? And if the answer is no, I don't want it. Now I do put whatever down to get my rate down. So sometimes if the bank's going to give you a 10% discount on your interest rate because you put 20% down, I'm into that. I can see how that would amplify my leverage and save me considerable amounts of money. As long as my capital is making me 20-30% CAGR, I'm okay. So I will put more down if necessary. And I do a lot of my flips, I get them in cash. That is not because the math supports that. It's because it's easier for me. Like, it's a pain in my ass to go and get a financial audit at the bank where they go through 90 days of statements and they want to verify every lease and every rent deposit. They want to verify all your tax returns. Feels like an anal probing to get a mortgage. So I sometimes would spend 50 or 75 or 100 hours creating packages, answering documents with them, going back and forth to get a mortgage on a property. I now just go with cash, buy the property. If it's going to be a short flip, I don't want to pay legal costs to put the mortgage on, legal costs to discharge the mortgage, all of my time and effort. So I often will get either a quick private from a friend, they'll just throw the mortgage on nice and easy, or I'll just fund it in cash. Or friends sometimes will just lend me the funds and whatever. Like, there's lots of structures you can use. I've used several of them. Right now, I've been using a lot of my own cash to do these deals, and that's just because the effort involved and the value of my time, right? If I spend 50 hours at $1,000 an hour, it's $50,000 of my time to get financing, when the total interest cost is like $5,000. It's a waste of time. So I'm just trying to focus on the best return on time. Yeah. Hong Kong Fui says, I can't service debt on a property. Can I just sell it quickly? There is no selling property quickly, but unless you want to liquidate at a big discount, or you're in a big market like Toronto or New York, if you drop even 5-10%, someone will jump in and buy it. In the more tertiary markets that are smaller, small rural markets are really illiquid. And so you may even drop the price 50% and still there's no buyer because there's just no one looking. But in Toronto, there's 10,000 eyeballs on it and someone's going to pick up that deal quick. So the less liquid the market, the smaller the market typically. But the less liquid the market, the harder it is to sell quickly, and the more of a discount you need if you need to sell quickly. So something to factor in, I guess, when you're looking at assets, how liquid is this asset? And if you do need the cash soon, then you need to factor that into your decision, right? Of like, how am I going to handle this in terms of getting out of this property that the debt on the property does not make sense. Now, you could potentially, if you already have this asset, it's a different discussion than if you're acquiring a new asset. You already have this asset, it's already set up, you've already got a mortgage on it. Maybe it's cash flow losing $200 a month on a variable rate mortgage, but maybe rates are going to fall next year, and they probably will. And when those rates fall, you're going to be cash flow positive. And not only that, but the property value is going to increase. Like, it's a direct relation. If your 1% rates rise, property values lose 5% or gain 5%. So if rates go from 7 to 3, real estate's going to jump 22%, give or take. 25%. So you get a huge lift if you buy right now when rates are 7% and rates fall again to 3, and they will. When they do fall to 3, all us real estate investors will get huge lifts. Now that works if you don't get too crazy with the leverage. You know, you want to be taking on like 15, 20% debt because the market will never appreciate fast enough to offset the debt load. But if you can go raise capital at 5 or 10%, you buy as much as you possibly fucking can at those rates and you hold. I'm acquiring hundreds of units right now in real estate, and I don't love it. I don't love the workload for it, but I know that it will make me millions of dollars. And so that's part of why I'm doing that. I'm trying to do it in a way that's more passive in nature. I'm trying to be more of the high level puppeteer as opposed to the down in the weeds operator. And I recognize that the less I'm an operator, the less efficient my business is, but I will just do more volume at a lower margin. I much prefer that. It's just my preference at this stage in the game. Now, there was a time where I was like so focused on the margin, and it's still important. It's just not as important as the volume. Chuck says, what's a realistic ROI that a novice real estate investor should achieve on their first project, assuming they don't grind trades and find an amazing deal, etc.? So if you don't grind trades and you do a terrible job at analysis and you let things run and whatever, you could lose money in real estate, especially right now. I know almost every real estate investor that I've been following has left in real estate investing. Even big guys I know are not doing well. So it's interesting, like on my social media feed, I would see all these people like, we're quitting my 9 to 5, this and that. Now I'm seeing like, bought this business, working on this new job, not focused on real estate at all. And so it's interesting. Everyone's gone from like wanting to be a full-time real estate investor. Now no one wants to be a full-time real estate investor. And the reason is we're in a recession, especially in Canada, where prices are not rising. And so in the old market, if you did a flip and you did a bad job on it, it took you a year to finish the project from start to finish, and you had all these problems, whatever, you get rewarded because you're having 15% appreciation a year. And so if you missed and you messed up, whatever, appreciation would save you because the longer you spent doing that flip, the more you made from appreciation covering your ass. So now we're at a different market where market's actually falling. And so if you're really good at cost control, you can still lose money. We had a flip recently where we lost money still. Flip in Sarnia, my brother did. Our cost control was like really good. Our problem was the market fell heavily and we couldn't get, like I should have kept the property rented out, to be honest, in hindsight, but I sold it and bought 2 more. So that's my philosophy. Whenever I sell something, we came to closing and my brother and I were both like, why did we sell this property for this price? Like we're doing all the numbers at the end and we're like, we actually lost money. Why didn't we just hold this? We just made it a duplex and just hold it. It's like a $300,000 property. You could have easily made $1,500 aside on the duplex and it would have been 1% real cash flowing. It's like, why did we dispose this? Like, okay, now I got to go out and, so now I got to put the effort in. Can't change what's happened. It's sold. Now I'm taking the cash. I go buy 2 more. That's my philosophy. If I sell something, I regret selling it, I go buy 2 more. So now I've got 2 properties locked up. We just picked up 2 properties for this. The price that I sold that one for, I just bought 2 more. I bought a triplex and another single family house in the same area. So that's my philosophy is if I sell something and I regret it, I go and I hunt for deals and I find 2 more. Thankfully, I have never regretted. People say, oh, I regret selling. I've never regretted making a sale ever. I mean, sure, I've thought like, hey, there's buildings I sold for $400,000 that are worth $1.2 million now. I have a building I sold in 2017. There's like $460,000. It's worth $1.2 million right now. It tripled in value. I have no regret because I sold it for $400,000 and I bought 4 more houses. So for me, it's like I always just redeploy my capital somewhere else, and I only ever regret if I didn't redeploy that capital. I've always redeployed the capital. For me, a number of deals always fall in the lap. It just kind of works out that way. So that's life. You know, at the end of the day, like the new deals will come if you know how to hunt for them. Then you don't hang on. Like a lot of investors, it's a flaw I'm noticing right now. Like are just heavily focused on holding on. They're like, I gotta get this price. I'll let a property if I know it's worth 500. I might even sell it for 450, just because you know what? I'm okay to let it go. I'm okay to take the money and buy 2 more deals because I know where the good deals are. If I can get 95% of the value, or 90% of the value, or 80% of the value, but I can go find another property that's worth 50 cents on the dollar, I'll go take the 80 cents and buy 2 more of the 50 cents on the dollar. So I just keep the capital rolling. I don't focus on, like a lot of people just hang on. They're like, oh, you know, I can't sell. And that mentality, if you have high interest rate debt, which a lot of flippers do right now, and developers do right now, can sink you. You can go bankrupt if you can't get liquid enough. So never be afraid to get liquid. Never be afraid. Don't let, like, if you lost on a deal, don't let that discourage you from doing another deal. Your next deal can be your saving grace. Don't focus on like, oh, I fucked up this one property. I made this one mistake in this one business. Life is long. You know, we're just getting started here, guys. And anyway, that's the message I have is like, just, you know, keep going. Don't give up. But yes, to answer your question, Chuck, in short, I would say in a bull market, you could target 30% annualized return. In a bear market, you may have years where you make 5% annualized return for a number of years. But over a 10-year period, I would always expect at least a double digit. So 12, 10, 12 minimum for a novice investor. Or else I would say don't even bother in real estate investing at all. If you're not good enough to make a 12% compounded return, what are you doing? Especially in small properties. It's so easy to do. Mike question, opportunity on a rooming house, still cash flows, 8 rooms, thoughts. Could make sense. I don't know the details of it, but if it cash flows positive, the thing that people don't factor with rooming houses, I had a bunch of them. I used to have one of my first big deals was in 2016. I bought a 23 bedroom side by 2 buildings rooming house. It's 23 bedrooms. And they rented for $500 a room. So I was making $12,000 a month in rent. And I bought these for like, I think $310,000 each in London, Ontario. It's crazy because how much things have inflated in value since then. But thinking at that deal, one thing I didn't factor in, it sounds like amazing. I think it was a 3% real deal. You'd think like a 36 cap, or I think it was a 20 cap or something. It's like, how do you lose on that? And still, I had months where I didn't make any money. I had years, a whole year where I didn't make any money because I had rooming house issues where I had like one guy would steal from someone else and then they would move out and we'd have vacancy. Or like one guy tried to catch the place on fire. So you have shit like that in rooming houses where people don't factor in like how high bad debt expense is. That's when a tenant doesn't pay. How high damages can be. So that can be up to 3 months of a tenant's rent. So factoring in like 25% of the rent could just go to damages. Vacancy expense. Like I'd have 4 rooms filled and there'd be a 5th bedroom in this 5-bedroom, 3-bath unit. And it's like that 5th room is always hard to fill. Because the other 4 dudes were so weird that I go for a showing and he'd be there like sitting in the living room hanging out. It'd make it hard to rent out that 5th room. Or like someone would move in and then they would get in a fight with the other guy in the rooming house. Shit happens all the time like that, drama. And it's a problem, I think, in a lot of ways because people just don't factor that into their numbers. So rooming houses seem attractive, but sometimes if you aren't, like if you're there every day and you're managing it, you don't have a lot going on, you can set up good house rules and whatever and put good people in place, and then it can work really good, Mark. But if you're not and you have property managers in place, property managers don't care as much, they'll just place people in there, you may find that your numbers might not be tight enough and your cash flow might not be as good as you thought it was for the headaches that you're going to have. But it's up to you. I mean, I've done it. I've made lots of money on it too. I mean, those buildings, I still made 6 figures on them in the end. So, but just a lot of headaches, a lot of late night calls. Mark says, what else should I be thinking about and looking for buying? Anything cash flows really well. And rooming houses can make sense. I mean, I'm not deterring you. If you can buy an 8-room rooming house for $30,000 or $40,000 a bedroom and may get $600 a month in rent, I mean, that's almost double 1% real property, getting close to 1.5%. That's pretty good. I mean, at the surface, that's a pretty good deal. What visa do you have that allows you to live and run a business in the U.S.? No, I have no interest. I was talking about getting a green card and citizenship. I don't ever want to be a citizen, and maybe I'll change my mind in the future, but I have no interest in ever being a citizen in the United States. The more I've looked into it, the less I want to be a citizen in the United States. They tax income globally. They are brutal. Capital gains tax rates right now are worse than Canada. The highest marginal brackets are like 35 and 40% for taxing in the US. If I'm going to leave the comfort and the beauty of Canada, I'm going to go to the Bahamas. I'm going to go to the tax residency where I'm treated like a king, treated best. And the US doesn't treat people best. It really doesn't. So my understanding though, and I don't spend, like if you wanted to spend 6 months a year in the US or more, you would need to have more than a Canadian passport. You would need to have like one of the visas. Now the E5 visa is a visa through investment. Like if you bought a motel or something like that. There are ways you can invest in the US without, like you could have friends who are in the US who could hold the title of the buildings for you. You could set up offshore structures and trusts that operate your buildings, in which case you can go and check on them if you want to. As a Canadian, you can go into the US 6 months less a day. So just with your Canadian passport, you can be in the US like all winter if you wanted to. It's not a problem. You don't ever need a US citizenship. All good. But if you wanted to, there's also an E2 visa, which is if you're running a business in the US, you have right to go there whenever you want. I'm just going to keep my Canadian passport. Like, here's a theory. You go to Costa Rica, Let's go to the Bahamas. The Bahamas. They're trying to make the Hamptons, the little Bimini, the island Bimini in the Bahamas. It's like 50 or 60 miles off of Miami coast. It's like a 20-minute plane ride, if that. You could boat there in an hour and a half. They're trying to make that, and it's tax-free in the Bahamas. There's zero capital gains tax, zero tax of any kind. You could make $1 billion in crypto. They don't take anything, nothing, which is cool. And the Bahamas is very financially savvy. They have a good, strong financial system. I think it's the second wealthiest financial hub in North America. I think it has, maybe it's the third. Next to the US, I think it's the second largest. I think it's bigger than Canada in terms of assets. I have to fact check that, but it is a financial hub. They have, great banking system there. So I would definitely choose to, if I was gonna live somewhere, I'd pick the Bahamas. And if I was gonna run a business, I would go on business trips to Florida. It's a 20-minute flight. I would go on business trips as needed. I could go on 20 business trips a year if I wanted to, right? So there are definitely structures you can set up. Everyone was all about, in social media like 3 years ago, during COVID, everyone moved to Florida. All the Canadians I followed, all the rich ones, were like, oh, the world's ending, I need freedom, going down to Florida. And it's like, Florida isn't even that much different than Canada. In a lot of ways, it's the same. A lot of ways, it's the same. And if not worse. I'll give you an example. So I have a motel. I have a 24-unit motel in Canada, and we have 30-something units, whatever, Florida. So comparing two motels, two similar-sized motels. In the US, I have to file a monthly report on all of my revenues and pay two agencies like a 13% tax off the hop for tourism and whatever to the municipality. I have fire inspections, I have property standards inspections, I have tons of filing obligations in the US. There's tons of regulation. And it's like the bylaw there is way tighter than in Ontario. In my place, I have like an annual inspection and I do an annual HST return. That's it. There's no monthly reports. There's no oversight. For Florida being a free place, it's very strict. There are a lot of licenses and regulations and things that there's not as much of that in Canada. It's actually harder to run a business, I would say, in Florida. And I might be the only guy on here that's investing in Florida that's talking shit about it. Not to talk shit, but like Florida has its issues. It's a lot more difficult in a lot of ways to do business in Florida. Cost control is a lot harder there. It's just been wild, A lot of things that I thought were going to be easier were not. Financing's harder, much harder, much worse too. Like in Canada, you can get prime minus 2% financing with CMHC. You can't get that in Florida. You're going to pay 8%, 9%. Loan to values are terrible there too. There's a whole bunch of things that aren't as good there in Florida. But anyway, so if I was going to do it, I might get an E2 visa, which would not require me to be a green card citizen because the US taxes globally. Wherever you go, they want a piece unless you renounce your citizenship. So if I was a US citizen right now, I'd fucking renounce that passport so fast. All good. Get a passport in Costa Rica, get a passport in Bahamas. Canadian passport's amazing. You leave Canada, they're like, oh, you're no longer a deemed resident, no more tax in Canada, you're all good. It's pretty amazing from what I've read. I mean, Canadians, they'll let you keep your Canadian passport. And if you ever want to come back, let's say you get cancer. And you're like, oh, I blew all my money, I have no money, whatever, I can't afford to get cancer treatment, which is like, that would never happen, but let's just say it did. You can come back to Canada, redeem residency in Canada, free healthcare again. Come back anytime you want, free healthcare again. But then if you leave, no tax. No tax, Canadian government, we're all good. We only tax you if you live in Canada. So if you don't live in Canada, you don't pay tax in Canada. Why would you ever renounce your Canadian citizenship? It's a beautiful passport to have. Canada is one of my favorite passports in the whole world. There's no other passport I'd rather have than a Canadian passport. Now, do I want to be a deemed resident in Canada? Bit dicey during times of like we saw during COVID, how restrictive it could be. But Canadians who are abroad were treated so well. So free, no tax, can come back anytime you want, can leave anytime you want. Especially if you file the exit return, there's no fees, nothing. Like if you're deemed out of Canada, you're good. You pay your penalties to leave, you pay your taxes to leave, and you're free. So to answer your question, I have no interest ever. I just have no interest in living in the US permanently. I don't see it as a better place than Canada. I just see it as the same. Now, I could see doing business. I think even when I'm in the Bahamas or Costa Rica, I will do business in the US, which means I'll pay some tax. My corporation will pay some tax. But when it pays out to Bahamas, or Costa Rica or other offshore places, it will eventually go to a tax-free domicile where it can't be seized. I think the US isn't that much better than Canada in terms of, political. In the whole, I think the US is becoming very left-leaning in a way that it wasn't before. It's getting, to the point where the 51% are suffering. The poor majority is what I call them. Like the 51% of people that are working paycheck to paycheck, that have no savings, no net worth, they're the voting majority now. And they're losers. I hate to say it, but like most of them have toxic mindsets. So they're sitting on their phone 8 hours a day. They're sucked into things that are non-producing. They just aren't doing anything with their life. And they blame the government. They blame the rich. All they know is that their life sucks. They don't understand why. They have bad mindset, bad habits, whatever it is. A lot of it's cultural. And it's not even, like, it's a poison too. Like the culture kind of, as more people, poison the well, others, drink of the same well and become poisoned. So what happens is when you have a majority of people, and I think this is what's going to happen, is you'll probably have a divide where the middle class is disappearing. And I think the majority are going to fall. People are lazy, right? So the majority of people will not reach up and achieve, greatness. Unfortunately, the bell curve is such that IQ falls at right around 99.8. So 50% of people have a double-digit fucking IQ. It means they're just not capable of beating someone who's super driven and super smart. Just the way it is. And so the top half will crush the bottom half. And in business, in a free market, the top half crush the bottom half exponentially because you're rewarded by making good decisions early. So if I make a good decision to, work extra hard when I'm 17 and I save $10,000 and I invest that over my life, and some other degen's drinking and passed out in a ditch, and then they get their life together, I still end up way further ahead of them because I made a couple good decisions early on. And the culture right now is like drinking, drugs, go to school for 4 years, go into debt, make bad decisions. It's okay. Enjoy your 20s, travel, party. That, and then Instagram and Facebook and social media, TikTok, they personify that and amplify that to the Gen Z. Where and I, even myself, I'll get on social media, and I'm in my 30s now. So I'm like young 30s now. I'm getting older, and I'm a millennial, I guess. And even I get sucked in to I'll be like, I just spent 2 hours scrolling Instagram, watching reels. Like, holy shit, where did my day go? And I'm hyper productive type A. I can imagine someone who isn't like me, who isn't as driven or motivated, gets sucked into their phone for a couple hours, their whole day's gone. They've made nothing. They've made no productivity. It's not necessarily anyone's fault. It's a cultural problem. It's, the fact that the big tech giants are trying to consume our attention, and they're really, really good at it. They hire the best in psychology to make sure we're addicted to our devices. And that's not productive in a lot of ways. For most people, I use Instagram as a tool. For me, it's a capital raising tool, it's a deal sourcing tool, it's a networking tool. But it's a business for me. I post 10 times a day on social media. So I use it I operate it like it's a business. But even I get sucked in so hard to I'll spend maybe 6 hours on Instagram some days, on my least less productive days. And I'm like, geez, that generated me nothing. I got nothing out of that experience other than I wasted time of watching cool memes and sending them to friends of mine. I'm like, oh, look at this video. And I do that all the time. I'll send videos to people look at this cool product or whatever this is. And it's a real toxic blemish for society. Anyway, getting back to my thesis, my thought process on this is that this lack of productivity will drive people to a point where their life is shit. And inflation's running wild. If you make bad decisions for a long enough period of time and you aren't productive, in a capitalist economy, you get destroyed, right? So these people, right? These people are suffering. And so the result is they're going to vote for what's going to help them. And they'll vote to steal from the poor. So what I think is tax rates are going to rise dramatically in the US. Do you think you're going to go to Florida and be fine? Federal tax rates are 33%. And I think they're going to get to 50% in the US. So if you think you're going to Florida to escape, or Texas to escape tax, you're not. You're doing the same shit as in Canada. Maybe they're a couple of years ahead, and maybe the state is more, freeing. Like Alberta in Canada is way more freeing, way better tax policy, but it's still within Canada. And I think that eventually I will not want to be in Canada or the United States. It's not now. My kids love being here. I don't care about the tax. I'll pay the tax. To be honest, I don't even have a lot of tax to pay. We're in a recession and I lost a lot of money in the stock market, so I'm good. I got a tax-free living in Canada right now for a couple of years. Things are good. Losses carry forward. So that's a nice thing about, losing some money. The positive silver lining is that I don't have to pay any tax for a bit. I get to live in Canada. Canada's a great place. If you could live in Canada for free, paying no tax, meaning you don't make much money, Canada's an amazing place for a loser to live. It's an amazing place in general for anyone, even not a loser, but especially if you're a loser. Like if you just do nothing, you're a leech, and you just suck off the system, Canada's an amazing place to do that. Free healthcare, $2,000-$3,000 a month in government benefits if you have a couple kids, you don't work. Just collect all the welfare programs that exist. There's like 7 programs. I did a reel on it where like there was a lady with 5 kids and a face tattoo. She's a drug addict. She's making more than a lawyer net of tax, more than a doctor. Doctor starting out net of tax. 6-figure salary net of tax, paid to her tax-free cash. That's Canada. And the US is not that far behind. So that said, like of all places I've been in my life, Canada and the US, Canada specifically, some of the nicest people. Culturally, I think still it is better than some of these foreign places where I don't have the cultural similarities. So for me, I like Canada. I like the environment here. The water's fresh, the air is clean. It's a great place. I've been to Brazil, or I've been to Africa. I've been to other places. I went to Ghana. And like the air is just putrid. The water isn't fresh. The people they're okay, but they're not Canadian. It's like, I don't know how to explain it, but the really shitty thing about Canada is the tax system. It's really bad. If you want to produce, you want to do a lot with your life, Canada just doesn't reward that at all. And the US is getting closer to the same, unfortunately. So, yeah. Anyway, whoa, just clicked on my phone. Sorry about that. Lost the chat. I'm back. I don't buy weed stocks. Sorry, I can't comment. They're up on a little bit of a hype right now. They were on a huge hype and then a huge crash. I like to look for strong cash flowing businesses, and I don't think that the multiples that weed stocks sell at is attractive right now. But I haven't really dove deep on it. What are pros and cons of Pierre and pros and cons of Trudeau as well, in your opinion? I mean, it's more of the same shit in terms of like, the Liberal versus the Conservative Party. It's the Conservative Party is a watered down, moderate, and the Liberal Party is like a left-leaning moderate as well. So in terms of like radical change, Pierre, way better for me. For me and mine, like my friends and my family, we all benefit from Pierre getting into government. Now, all of Canada actually benefits from Pierre winning, just in terms of long-term viability of our economy and our country. Trudeau is the least competent economic and honestly just policy lawmaker, prime minister in history. He's the least qualified. Fact. Now, he doesn't run all the country. He doesn't make all the decisions. So you can't really say that it's all his fault. He's got a whole cabinet of idiots. Oh, my phone's going to die. I got like 10% battery. Sorry, I forgot to charge my phone before this stream. So it's pretty good. It lasted this long, almost an hour. I think my battery was like 40% when I started. Gotta love the new iPhone. That's why Apple's the most valuable company in the world. We're all hooked on the software and the hardware. What was my point? Oh, I guess politics. Look, I will, and I think most of us will amend our lifestyles to suit the political environment. And what I mean by that is like, or even the tax environment. So as an example, if you shelter under $30,000 a year, put all your money in your corporations, pay yourself a salary of $30,000 a year, you can collect the Canada Child benefits that Trudeau's paying out. I have 3 kids. I can collect $2,200 a month, cash, tax-free. That's like a $30,000, $35,000 a year salary right there. I'm going to start collecting it. I was paying so much tax that I wasn't able to collect it. I'm going to start just change my lifestyle to collect the government benefits, if they incentivize certain things, we do it. And so, yeah, I don't know. Trudeau's not all that bad in general, in terms of like the bottom third, the bottom half are doing okay under his rule. And so in that way, I think he's closing the divide a little bit between the rich and the poor. So I can see the arguments for what he's doing, but the guy's such a bozo. So much corruption, so much waste. I don't know. Pierre's not perfect either, but that's who I'll be voting for probably. Just because, again, it is the best option for me and my family and for my kids. I want my kids to, like, I hope my kids, get to still come to Canada and it's still a decent place. It really has not been a good decade. Government spending is just ballooning and services are not getting better. So anyway, Chung says stocks for real estate. No, definitely not. I would say the opposite of that for me and for most people. I mean, I don't know anyone who over a 25-year period, I don't know anyone over a 25-year period who could beat what I can do in real estate in the stocks. I don't know anyone. So, and I know lots of guys in real estate who can beat guys in stocks. It's really, really hard to, over a 25-year period, beat the market. Over a short period of time, you could buy NVIDIA stock at lucky, make 1,000%. Your portfolio looks amazing. But to do that over a sustained period of time, the risk-adjusted return, just not there. Alex, how you doing? You're so correct. Thank you for the comments. What if half the reels are about real estate? Yeah, but they're like, and that's true. A lot of my content is almost all like curated motivation stuff where I'm like, you can do it, David Goggins, or like, Alex Shimosi's like, little tips. There's some good nuggets there. I'll give you that. Tip top, what state would be the best to create a business in to hold your real estate assets? Talk to a lawyer. I know some people are saying Delaware type trusts. Where you set up your structure isn't necessarily the same state that you're investing into. I'll say that. So just because you're, say, investing in Texas doesn't mean you incorporate in Texas. Just because you're investing in Florida doesn't mean you set up a Florida LLC. Now, you might set up a Florida LLC and then also have a holding company out of Wyoming or, South Dakota or whatever. There's a whole bunch of structures you can set up. I think that Canada is in turnaround with the economy with Dixon Center Pierre. No, the economy is not doing well. We're years from a transformation and policy decisions take time. So best case scenario, Canada really blooms in 2027, 2028. It takes time, right? Years from policy decisions to have effects. We will still feel the effects of Trudeau's decisions now in 2026. But I'm bullish on Canada in terms of like, we have a great population of smart, educated people. Not only that, but Canada's the largest country in the world in terms of quality land and fresh natural resources. Russia's the biggest, I believe, but Canada's the second largest country in the whole world. We're huge. We have a lot of land. But not only that, our land is awesome. Like, we have good quality, like our glaciers have great amounts of like clean water. We have the largest supply, I think, of freshwater Great Lakes in the world. Tons of forestry, minerals, oil, all of that, and just raw land. As the world gets more and more crowded, land itself has value. And I think where we're located, as the world continues to get more and more dense, Canada will be a very, very valuable country. So anyway, guys, what are the 3 levers to creating long-term wealth? You guys want the end? You want the sign off? Here we go. The secret to unlocking a wealthier you is 3 levers and control your financial future. Spend less, earn more, and maximize returns and the difference. That's it. Those are the 3 levers you can play with. That's how you build wealth. That's the secret formula. You got to learn to spend a lot less than you earn, and that means you have to learn how to earn more. And then once you start saving, you got to figure out how to invest that. A lot of people, they fuck up one of the 3 levers, and that's why they're poor. Or they fuck up all 3. So learn to master all 3, and you're rock solid. You will be potentially even a billionaire, but you'll be rich in your lifestyle. As long as you can keep your lifestyle below what you earn, you'll be good. That's the secret, and then investing the difference well. All right, everyone. We'll see you next week. Secret to all of this is just those 3 levers. So I wish, if anyone's watching this and they want to better their life, I got hundreds of videos. If you're new to the channel, thank you for joining. What else was I going to say this time? Oh, if you're getting value out of this, hit the like button. Go in the comments, leave a comment. I appreciate that. It's been 6-7 years I've been documenting this journey, longer now, I think. So thank you, everyone, for all of you guys who have watched, guys and girls who have watched over the years, and we'll keep creating more content for you in the future. See you next week.